What's up, YouTube? Today we're going to discuss the major financial highlights and we're going to discuss the valuation of hims and hers. All right, let's start. So last week was the meeting of the Fed, and Jerome Powell kept interest rates at the target range of 4.25% to 4.5%. So that means he didn't change it. And this was as expected by the market and already priced in. And this is why we didn't see that much volatility last week. This is what he said in that meeting. He noted that the risks of higher unemployment and higher inflation have risen. So overall, he was pretty positive, but he also gave this note to be very cautious for this. And he said it's no time yet to lower interest rates, even though Trump has been pushing him quite a bit. Then, if you look at the target rate probabilities for 18 June, this is the next Fed meeting, we see that 91.9% is expecting the rates to be the same, and only 8.1% is expecting it to drop. So, of course, dropping the rates will be very bullish, and there are some things that might cause to drop it in the next few quarters. But for now, we have to do it with this. Then I want you to look at this earnings scorecard of earnings season Q1 2025. And it says for Q1 2025, with 90% of S&P 500 companies reporting actual results, 78% of S&P 500 companies have reported a positive EPS surprise, and 62% of S&P 500 companies have reported a positive revenue surprise. So this is looking very good. In the past, there were some worries that the S&P 500 was way too overvalued. Of course, we saw this drop in March and April, but it turned out that most companies have positive earnings, which is a good sign. And we've already been over some earnings on this channel as well. Then let's look at the valuation. The forward 12-month PE ratio for the S&P 500 is 20.5. This PE ratio is above the 5-year average 19.9 and above the 10-year average 18.3. So we still see that the S&P 500 is currently like a little bit overvalued. It's higher than average over 5 years and 10 years, but it isn't crazy expensive. So as long as companies can report good earnings, the S&P 500 can continue to grow without very major pullbacks. So this is also good news. Then we see this chart, and we see the S&P 500 in blue, and the blue line, the price line, and the forward 12 months EPS in black. And it's usually a good buy opportunity if the blue line is below the black line. Basically means that S&P 500 is under the forward EPS. Right now it's currently a little bit above that. And when we dropped because of the tariff uncertainty in the world, then we were a little bit below that. So that was a huge buying opportunity. Congrats to all the people who bought. I bought some Google, I bought some Microsoft, I bought some Hims and Hers, I bought some Amazon, I bought a lot of stuff because I knew things were going to get better. I knew the whole tariff debacle wouldn't last forever, as markets always have this natural tendency to basically find a balance, and the world will also find a balance. And right now we have some good-looking news. Peace in Ukraine is coming closer and closer. Some stuff I'm gonna talk over in a bit about the trade deals regarding tariffs. So this is looking pretty good for the S&P 500. Then about the tariffs, the UK and the US made a tariff trade deal last week. They made a deal, although the deal wasn't that fantastic for both parties. They were both celebrated like it was something huge. President Donald Trump's blanket 10% tariff on all imports from countries around the world still applies to most UK goods entering the US. But the deal has reduced or removed tariffs on some of the UK exports, including cars, steel, and aluminium. Trump declared on social media this announcement to be a major trade deal. Some parties have been saying it's not even. Either way, it's still a deal. And as I knew before, I've been saying this on this channel before that the world has no reason, has no benefit of all this uncertainty. So it might take a while, but eventually it will find a balance and there will be deals because even the US will not benefit from this high, crazy tariffs rate. So this is the first good news that came out last week that Trump cut the tariffs, even though there's still a little bit of uncertainty. And yeah, some parties in the UK have been saying it's not that great of a deal. But today we got finally some very good news because US and China have been into talks last week. And this news came out today. US and China to slash tariffs for 90 days after talks yield substantial progress. All right. So 2 days of high stakes talks between the US and China have led to a 90-day pause on tariffs, with duties set to drop by 115 percentage points on both sides by Wednesday. All right. So the move will drop American tariffs on Chinese goods, which currently run as high as 145% to 30% and slash China's retaliatory duties from 125 to 10%. This also gives markets what they wanted, a de-escalation. US future markets surged higher in pre-market trading. So we will look at the chart at a bit. So this is, as I have been saying before, the whole world, the financial markets, everyone was thinking that the world would like collapse or just explode or whatever. But I knew this was just like a very slick um, negotiation tactic from Trump. He just wanted better trade deals. He wanted better deals with other countries. So he threatened the world. He was very aggressive in his approach, but in the end, there will be deals made, and maybe the deals won't be that big of success. They will be announced as a success, so that people will believe in it, and this is why the markets will go higher because the markets want this peace. They don't want this escalation because this is not a benefit for anybody. Um, so I believe that in the coming days, weeks, or months, we will hear more about these trade deals also with other nations, and I believe the markets will rise accordingly. Then look at the S&P 500. We see this market structure right here. The top was around 6,100 points. The low was around 4,800 points. And then we see a low, a lower high, and a lower low. Right now we are above this higher time frame high, the market structure high. And if you can close at least one or two candles above this level, I believe we can officially call this level the low and the bottom. And we can officially claim the bottom is in, and we can continue to see the S&P rising from now on. Um, so this is very bullish for the S&P 500. Let's check out the Nasdaq. For the Nasdaq, it's already above that level of around 20,200 points. So this is very very good for the Nasdaq as well. If the S&P and the Nasdaq can close above this level, let's say 1 or 2 days, then we can officially call this the bottom, and then we can move on. So in the end, we can conclude that the people who sold out of fear, the people who didn't buy because they were expecting stocks to drop even further, they lost out big time. And the people who held all their bags, and the people who bought even more, who bought the dip, they will profit right now, as the markets are already up by a lot. And I expect this to continue for the next few days, weeks, and months. All right. Then this, in my previous short video, I said something about HIMS, and I mentioned a few times that I will not sell below the price of $70. Am I still behind this? The short answer is yes, I am. I'm not planning to sell HIMS anytime soon, but especially not below the price of $70. In this sheet, I will show you my valuation I made for HIMS, as this will guide me to where I will be selling my stocks. So on the left, we see the revenues, the market cap, the current price, the price target, upside, and a lot more. And I use these numbers from the Hims and Hers investor relations page and from their last earnings report. For the data of 6 May, I used the trailing 12 months data of the revenue. So that's 1.7 billion. For the full year, I used the expected earnings. This is the number that Hims gave themselves. This is going to be $2.3 billion. And note, this is already pretty conservative because Hims always gives an estimate. It always basically under promises and over delivers. It always delivers better than they even their own estimation. So in my opinion, this is already pretty conservative. And then the full year 2030 estimate they gave, the revenue estimate they gave in their last earnings report, and it is $6.5 billion. Now I calculated their EV revenue multiple, and for the trailing 12 months it's going to be 6.3 at the price of $50 a few days ago. If you use the full year 2025 estimated earnings, is going to be 4.9, and even if you use the $6.5 billion of 2030, it's going to be even lower at 1.73. All right. So this is the reason why I've been saying that I'm not going to sell anytime below price of $70, because even though it rose all the way from 24 until 50, which is more than 100%, it's still undervalued in my opinion. Then I made some more calculations with the 2013 number, because of course the fair EV revenue multiple is a little bit subjective. I usually use 8 because I think that's a fair price to sell. But I use a few different kind of numbers in my calculations. First one is 4, then 5, 8, and 10. 10 is just only in like a very bullish scenario, because you don't really, if you estimate it's going to be 10 and it does not get there, then you will not sell and you will lose out. If you believe it's going to be 4 and then it gets to 8, then you also miss out a lot of gains. So I made these different assumptions, and then I'm going to base my price. Then I'm going to base the price I'm going to sell on this chart. So let's go over these assumptions real quick. We see that if we use a PS ratio of 4, so a price to sales ratio of 4, that the fair price will be $115. For 5, it's going to be 145, and for 8, it's going to be 229. And if we believe it's going to go all the way to 10, it's going to be $287. So this is exactly why I have been saying that HIM stock is currently undervalued, because $50 is nothing compared to these numbers. I might sell a little bit at, let's say, around $70, $80, but I'm looking to keep the biggest part of my position, to sell at like around 145 or $229. I'm currently planning to sell a part of my portfolio, a part of my HIM stock. Nee, niet, hoe zeg je dat? I'm currently planning to sell a small part of my HIM stock at around $70, $80. It's also this price target for these assumptions here. But I'm keeping on to the rest of my shares to sell at the levels of 145 or 229. So that may take a while. But I also wanna profit from the volatility, the high volatility of HIMS. So I wanna sell around the price of $70 or $80, because I know there will be pullbacks after that. But I also don't want to sell everything of it, because if it's not going to be a huge or major pullback, and we might not see like a good new opportunity to buy, then we won't miss out on all those gains. Because I believe it will go to 145 or $229 in a few years. So I hope I gave you some insights on why as So I hope I gave you some insights on why I'm not selling HIMS anytime soon, especially not below the price of $70. Please let me know down in the comments below if you have any questions. Don't forget to comment, like, and subscribe, and I'll catch you in the next one.